Welcome to our weekly review. You're looking at a daily chart of the Russell 2000 index. You can see it's making lower highs and lower lows, which is a definition of a downtrend. But recently, it made a trip to its 200. There's your lower highs and your lower lows, which culminated here on June 16th at 1641, and recently has been making higher lows, which gives us hope. Like I said, recently it made a trip to its 200 here and was rejected. And what we want to see, what I want to see is it rip right through that downtrending 200 simple moving average. As you can see right here, it was up 4% last week, and it's 4.3% below that level right now. So another good week, and we can rip right through it. That's what I want. We don't always get what we want, as Mick Jagger says. We get what we need. But we'll see what happens there. It's above the 50, looking strong, and had a reversal candle here on Wednesday and followed through on Thursday and Friday. So we'll just go from there, right? One day at a time. I'm going to get this out of here. But you can just see it's same as the Russell. It's a little weaker than the Russell, or the Russell is a little stronger than the Nasdaq. There's the reversal candle on Wednesday and the follow through the 50 on Friday. So that looks positive. But I say that the Nasdaq is a little weaker than the Russell because this is 8.1% below its 200 simple moving average, and the Russell is only 4.3% below this downtrending black line. So like I said, we want to see it rip through there. And I just want to take a look at some stocks, some leading stocks from leading groups. Here's First Solar, broke out with volumes, had nothing but just massive blue volume bars and just ripping higher. That's why we buy these breakouts, right? These gaps higher, because oftentimes they follow through, and this one's just riding its 10 EMA. You know, you don't need to buy the bottom or sell the top. You just need to get the meat of the trade in the middle. And First Solar is certainly doing well for its shareholders. There you see its base, you know, breakout, and then trading higher. So if you want to take a look at another solar stock, we'll go to ENPH, which to me, this thing is just basing, still within a base. This had this huge downtrend, like 8, 9, 10 weeks in a row, then formed this base. Yeah, it gapped up on earnings and holding its gains nicely. It's having a little trouble with the ghost of that round number, the 300. But if you bought on this breakout day, which I did around 240, you know, you're sitting pretty, right? You can just hold on to it and just let it work for you. It's being supported by its 21 EMA. And that's why, you know, you got to pay attention to these gappers up on volume. It was, you know, almost an 18% move on 317% above average daily volume. And well, I want to run towards those and not away from them. There are a couple other solar stocks that interest me, but they're kind of laggards. They haven't really been performing like First Solar and ENPH. Got to take a look at the weekly charts. Always, you can see this one, deep base, consolidated and broke out a little bit and holding its gains. You know, some people might call it a pennant or a flag pattern, but yeah, it's just pulling back to its 21, finding support there. So there's nothing wrong with that stock at all. Here's Canadian Solar. Once again, got to go to the weekly. This big base here, and it broke out with massive volume a few weeks back. And it's just holding those gains and trading above the 21. Any stock above the 21 EMA is gold right now in this week tape. All right, that's enough for the solars. I want to take a look at some of these renewables because they're performing well too. This one is Constellation. It's IPO, broke out of this IPO base. Like I say, if you it's not chasing. You know, when you buy a breakout, it's institutions buying, and oftentimes they follow through. And like I say, you don't need to buy the bottom or sell the top. Just get the meat of that trade there. And right now it's just trading above its 10 EMA. So that one is acting really well. This is Montauk, and this one broke out of a base here and then came back and made a another base, a base on base, if you will. So that one's not ready yet, but it pulled back to its 21 2 weeks ago, and then found support, and then last week rallied higher. So Montauk looks good. I do like the renewable space, but my favorite space is the biotech space. These things are doing really well. The group is trading well. This one won a patent lawsuit, didn't win. It had a better than expected outcome for a patent lawsuit in July, I believe. And yeah, right here. And it just started trading higher. Like I say, these gaps higher, 23% and 145% above average daily volume, and it's holding its gains, finding support at the 21 EMA. So that stock looks really good to me. Sarepta, this one has a buyout target potential, I believe. This is what I'm talking about. The outhouse or the penthouse for these biotechs down 51% in a week. That's a lot of pain, but it has recovered some after, a years of consolidating at lower levels. And now it breaks out here and it's holding its gains. And like I say, it's above the 21 EMA. Those are stocks that we like. It just made a 52-week high on Friday. So did this one here, PTC Therapeutics. Once again, we need to look at the weekly here, and this is the outhouse as it goes down and down and down and down, all the way to 26 from $70. So that's a lot of pain. Anyway, more recently, it's made a move and held its gains here nicely, and traded down to the 21, found support. This is a very common theme here with many of these stronger biotech stocks. I'm not going to go through all of them, but I will go to AMLX, which won approval for its Lou Gehrig's drug. If you've known people who've succumbed to that disease, it's very debilitating. So I'm glad this drug was approved. I know there's other drugs out there, but not effective. This one is an IPO. It's still in an IPO base if you just look at the weekly. But last week had this bullish candle with a lot of volume. I expect it's a more than $1 billion drug, and it's got a 1.7 market cap. So we'll see. It was already approved in Canada, so that one looks good. Revance got their Botox anti-wrinkle cream approved. You can see this base, and then the shakeout and the breakout, which is pretty common. That's why it's a handle, right? The handle is designed to shake you out of there. And this one just ripped higher last week on FDA approval. Anyway, that's enough with the drugs. I want to go to some retail. Murphy, this one, if you just look at the weekly, big winner, long time. You don't have to hold it very long to make money in this one, but it is pulling back to its 21 on lighter volume. So that one looks good. CASY had earnings last week. Had this real negative response. It was down, almost 1% after its earnings report, and then made a new high on Friday. So that thing looks good too. Another beverage, Celsius, in the retail space, gapped up and holding its gains, but it has this gap here at 89.05, and I have a feeling one day it's just going to come down to its 50 and close that gap and and fake people out and then rip higher. So it's doing nothing wrong. It's holding its gains, but that gap there does bug me a little bit. Chipotle is another one that's set up. You got to take a look at the weekly. This big base and this handle here, a little shakeout. So this one looks like it might be ready to rip right here. The shakeout below the 21, and then boom, the rip back up. So Chipotle looks good. I'm going to move on from retail though and go to the medical products. This stock has just been gapped up in February, gapped up in April on earnings, and pulled back to its 50 the first time as a gift, pulled back again. This is an earnings day right here. August 4th, pulled back again, and it's respecting its 21. So like I say, you don't have to, buy the bottom or sell the top. Just get the meat of that trend. If you're a trend trader or a trend follower, that's all we're trying to do here is TMDX. This one is, organ transplant. It doesn't have the earnings that you like, but the stock's performing. So that's what you want, right? Investors are buying this stock. So it's respecting its 21 and trending higher. And that's all you can ask for, especially in this terrible tape. All right, let's go to Eddie Van Halen. EVH, this one, you got to look at the weekly. This one consolidated for a long time, had this long handle, and then finally started moving higher. So this one looks good. just respecting its moving averages. Like I say, you don't have to buy the bottom or sell the top. Just get the meat of these trades here. These things are moving higher and trending higher. PRVA, another one. Got to look at the weeklies. This is just a big old base here, and it is moving higher. If you look at the daily here, it had this little cup and this little handle here as it pulled back to its 21, then exploded higher. I believe that was on earnings. But anyway, that group looks good. All right, we're going to go to the this is the Tony Soprano trade here. Clean Harbors, the garbage trade. You can see Clean Harbors had this Dolly Parton type pattern here, and then broke out and is holding its gains. That little base on base pattern. This is a double bottom. Some would call that the J-Lo pattern. Anyway, this thing's got a lot of flavor, and it's doing really well. Here's waste management. There's money in trash. There's money in trash. This is just a base on base, kind of like Clean Harbors. Moved up and holding its gains. This one pays a decent dividend, and a lot of people have it in their portfolio. The last one that I wanted to look in the garbage department is Waste Connections, pollution control, another base on base, little shakeout, then rip with Waste Connections. There's the shakeout, there's the rip. So there's money in garbage, like I say, and that garbage department looks pretty good. Super micro, this one does not have peers to run with. You can see it's got what Canon and Xerox and HP and Dell, a bunch of dogs, but this one's doing great. It's got these gaps. This right side of its base here is a little too vertical. It needs to trade a little sideways, which it's been doing, allow the moving averages to catch up. But it's got it's got earnings, it's got sales. You're looking at what, 6 billion in sales, some 5.5 billion in sales and 3.5 billion market cap. This is $100 stock masquerading at 66. That's one that I really like. We'll go to the chemicals. I don't really like these stocks. I'm not going to buy them, but I'll go over them because you can see the pattern here, the shakeout, then the rip, which is pretty common here. You get shaken out, people get their stops taken out, and then the thing rips higher, right? And that thing, I believe, made a 52-week high on Friday. So did this one. Similar pattern, same thing. It's got the base on base pattern. Some call it the Dolly Parton pattern. But anyway, it's got this shakeout and then the rip higher. And that one made a 52-week high on Friday as well. The last couple of stocks that I want to look at is in the oil and gas department, FANG. This has got a base with the pullback right there. And you know what happens after the pullback? They trade higher. So I'm going to keep my eye on this one. Same with the Exxon Mobil. This is another one that pays a big dividend. Looks pretty good there. The cup-shaped base. Yeah. This one, I'm not going to buy it, but a lot of people like this stock. So anyway, good luck with that. And we never give up. Have a good week.